following is a technical analysis on Tesla Incorporated, a company of the consumer cyclical sector and auto manufacturers here off the monthly interval. Whereas we are zoomed out on the much larger picture where you could even have a draw out of a primary reactionary high downtrend line off the all-time highs of December 2021. And I believe we've reached a critical juncture. No hard sell signals yet, but here off the monthly, you have key technical momentum indicators potentially honing in on bullish crossovers here, whereas these inflection points also act as pivot points, whereas you'll come in to have a potential crossover, and before you hit that crossover, there are scenarios where it averts and ends up sliding in the opposite direction for a prolonged move to the downside. Here you have an oscillator histogram printing red candle closes below here. And then what I really like here is it gives you that great feel of a nice, clean, bearish deliberation pattern, whereas you are starting to wane momentum here. And like I like to say, and you've seen in my previous videos, when you have a bearish candlestick pattern of that nature, medium and or high probability, there are times where you could have it act as a weight of resistance. And honing a potential continuation to the downside there. Now we've popped that 50 monthly exponential moving average. Well, that is bullish, but again, we are now on a nice clean inflection point of resistance here off the monthly interval. Whereas you'd take a short trade setup now, which would be aggressive. But when you consider the unleashing of the Meta app Threads and how it has become today as the most downloaded app ever, you have to think about all the Tesla shares that are leveraged inside of the Twitter funding there, and that could be a stark catalyst for a move to the downside. So I'll take you in and zoom you on to the daily interval. Hardly any volume profile zone up amongst this key inflection point with a nice clean gap in that volume profile zone. And here are the updates on some key technical levels where we have this primary reactionary uptrend line off the January 2023 lows, multiple reactionary lows there, and much more significant. That is a minor support level, whereas you have the mid-May reactionary lows, multiple continuous uptrend line there, where we've put in a nice clean divergent high with confirmed negative and bearish divergences that have been constructed and established amongst all three technical momentum indicators, with a bearish crossover on the oscillator and moving average convergence, with already red candle data prints below their zero line thresholds here. So again, no hard sell signals yet. But what I can tell you is a gap support here at that 261.66. If we opened up today, tomorrow, and put in a nice daily candle close below that key inflection point, then you're going to snap that up trend line and you're going to dig down deeper and more exclusive damage that will be reverberated across these key technical momentum indicators in a potential move in a revisit back test of the zero line thresholds. You have near-term divergence, nice clean divergent high of a rising bearish wedge pattern, and I believe that would open up really the floodgates there for a move right back down to a revisit of that 243.13 price support for 8.9% drop on a complete backfill of the gap, 235.26 for 11.8% crash, down to 221.60 price support for a 17% crash, which will coincide with that primary reactionary uptrend line off the beginning stages of the year and its construction. So that is the ultimate big level there, and I would suspect a potential bounce. And if short sellers take that level out, then you're going to put in the secondary sell signal, in my opinion. Whereas you have the 50 exponential moving average hovering it up above, call it a triple line of inflection points, with the bottom of that gap, 235.26 price support, and just a monumental key inflection point to watch. I ended up getting stopped out on a minus 5% trade last time I tried to short Tesla. But the two times before that on my channel playlist, we actually caught a massive drop off this big inflection point here. Darn near called the bottom right off that key inflection point. And then we ended up shorting it, I believe, right here for a double digit 10 or 15% crash there. And then failed to do so on that next move off that primary reactionary high downtrend line. But here we are, key inflection point. Bull traders, long traders, they need to step in now and begin to avert potential sell signal off this primary reactionary uptrend line. Defend the 261.66 heavily on a retest, back test at the bottom of that gap for prolonged moved up to 313.22 for 16.3% in gains. But if we snap that level, these are your key dollar cost average levels. If you're a long-term believer in Tesla, 5, 10, 20 years on out, these are your key inflection points to watch. Again, I believe we've reached a pivotal crossroad where all-out war could break out between bulls and bears.